Welcome back to Portfolio, everyone. And in today's video, we're going over the 7 best e-commerce stocks you can buy right now. Of course, the e-commerce industry has seen insane growth over the past 5 years, and all these 7 companies have seen growing revenues and growing income. And these are companies that are dominating the e-commerce space. With our changing society, people spending more time at home, shopping online from their phones and laptops, this overall trend of digital retail has been growing at a surging rate. So we're going to go over these 7 e-commerce stocks you can take a look at right now. These e-commerce companies operate in different sectors of the market, but are all predominantly online companies that focus on creating digital sales and like to provide consumer to consumer or business to consumer platforms for everyday users. So thank you for tuning in, everyone. I'm the Gen Z Investor. Every single day on this channel, we talk about different stocks you can buy, overall stock market performance, and any other big stock market news and headlines. And in this video, we're breaking down 7 e-commerce stocks you should take a look at right now. Like I mentioned, these stocks have been on an insane run. And of course, as our society continues to shift more to a digital world and spend more time shopping online, these stocks will continue to grow. My current financial freedom portfolio sits just shy of $52,000. Big red day today, down around $400, but only down around 0.83%. Overall portfolio still down just over 4% into the red, but nothing too worrying about. Over the long term, I'm sure the shares will come back and we will see some nice growth. We're going to jump right into the first e-commerce stock to take a look at. And this is the young Shopify, which has seen insane growth over the past 12 months. This is a company that has taken on Amazon. They've actually created a new partnership with Walmart. And this e-commerce company is actually a platform that allows everyday people or small businesses to create an online digital store, pay a monthly subscription fee to run that store, and then they can sell their products directly to consumers all across the world. So they offer a great platform that is very easy to use for any business, and Shopify has seen rapid growth up 170% on the 1-year chart. If we take a look at a longer term perspective, over the last 5 years, the shares have seen an insane run up. 5 years ago, shares were trading around $30, now up 2,753%, where they're trading just shy of $1,000 a share. When we take a look at their market cap, Shopify is currently being traded around $119 billion market cap. This is actually a Canadian company, and they are the largest Canadian company on the Toronto Stock Exchange. So this e-commerce company has seen rapid growth. For all these e-commerce stocks, we're going to take a quick look at their income statement just to show how fast these companies are growing and that they are all able to generate insanely fast revenue growth each and every year. So we take a look at Shopify. In the past 12 months, they've generated over $2 billion of revenue. Meanwhile, 5 years ago, in December of 2015 at year end, they had only brought in $200 million for that entire year. So they've more than 10 times their revenue in a matter of 5 years, which is absolutely incredible. If we take a look at the last 3 years, they've seen rapid revenue growth. From 2016 to 2017, they increased revenue 72%, 60% growth the following year, and 47% growth from 2018 to 2019. That is absolutely incredible. And for the 12 months ending June 30th, 2020, they saw a 60% increase in revenue year over year. So Shopify is posting huge revenue growth each and every year. This company is continuing to innovate and continuing to grow, and that is why we've seen their stock price continue to surge. And this company is beloved by its users, not only the actual businesses, but the actual consumers as well love shopping from Shopify sites. So overall, this company is doing a lot of great things right now, and I'm sure they will continue to grow as more businesses shift to the online world and actually create digital stores to sell their products. Moving on, the second e-commerce stock we have to take a look at is, of course, Amazon, the market leader in the industry. Amazon is the largest e-commerce platform in the world, currently trading at $3,100 a share, up 77% on the 1-year chart. You can see here they did see a little bit of March lows, but quickly recovered and completely surpassed that pre-pandemic levels and are trading very close to all-time highs right now. 5-year chart, they're up 500%. Steady long-term share price appreciation over the past 5 years. And this company has a massive market cap, currently around $1.58 trillion, making it one of the most valuable companies in the world. Taking a look at their income statement, they are bringing in massive amounts of revenue each and every year. 5 years ago, they brought in $107 billion in revenue. In the past 12 months, they've brought in over $320 billion of revenue, which is absolutely incredible to think about. This company is very profitable too. They brought in $13 billion of profit in the past 12 months as well. What we were going to take a look at is see a lot of these e-commerce companies, they're bringing in a mass amounts of revenue, but they are also not really making a lot of profit just yet because they are continuing to innovate and grow their business and spending a lot of money on research and development. But Amazon is a company that is bringing in so much revenue, and they continue to research and continue to develop, but they are still posting a profit each and every year. And 5 years ago, they brought in $596 million in net income, which is now up to over $13 billion in the past 12 months, which is absolutely incredible. And of course, like we mentioned, Amazon is still the #1 largest e-commerce platform in the world. They are the #1 e-commerce retailer, and they are there by a huge margin. Amazon makes up around 39.7% of total US retail e-commerce sales. So of the total US e-commerce sales, Amazon makes up close to 40% of that total number, which is absolutely incredible to even think about. Moving on, stock number 3 is not an American company. It is traded on the New York Stock Exchange, but this is the Chinese e-commerce company Alibaba, ticker symbol BABA, around $253 a share right now, up 60% on the 1-year chart. Beautiful long-term share price growth over the past 12 months. A little bit of longer-term perspective, you can see they're up close to 250% on the past 5 years, which is absolutely incredible. Looking at their market cap, this is another insanely large company with a market cap of around $690 billion. So this company has grown rapidly over the past couple of years. If we take a look at their revenue statement, you can see here that in 2016, they posted around $15.6 billion in total revenue. But in the past 12 months, they brought in close to $72 billion in total revenue. And this company is actually raking in a lot of net income as well. With $72 billion of revenue, their net income was over $21 billion, which is absolutely incredible. Put that into perspective with Amazon. Amazon brought in $320 billion of revenue, but only posted net income of $13. Alibaba brought in $72 billion of revenue, but is posting net income of $21. So insanely high profit margins for Alibaba, and they continue to rake in the cash each and every year. Number 4 on our list is the Latin American Amazon. Mercado Libre is the Amazon for Latin America. So they operate in Mexico, Panama, Argentina, Costa Rica, those Latin countries. Ticker symbol MELI at around $1,157 a share, up 78% on the 12-month chart, which is absolutely incredible. Longer-term perspective, up over 800%, which is even crazy to think about. 5 years ago, you could buy a share around $120 a share, currently being traded at $1,157 per share. Smaller cap company compared to Alibaba and Amazon at a $55 billion market cap. If we take a look at their revenue statement, you can see here that they've done a great job of growing revenue year over year. All of these companies have seen surges in revenue on the past 12 months. But this is not like a one-year occurrence. Over the past 4 to 5 years, these companies have consistently grown their revenue each and every year, which is awesome to take a look at. So we see here in 2015, they brought in $650 million of total revenue. But in the past 12 months, they brought in $2.8 billion. So they've seen beautiful growth over the past 5 years. If we take a look at their website, it looks very similar to most e-commerce brands we see in North America. It looks very similar to like an Amazon or an eBay. Nice, clean design, showing different products. Of course, this is in Spanish because they do operate in Latin America, but a couple very well-known American brands such as Bosch. Moving on, the next company we have to take a look at has actually been in the news a lot lately. Ticker symbol W. Wayfarer, around $314 a share. Insane growth once again. All of these companies have been on a rapid tear over the past 12 months, up 143%. Longer term perspective, the shares are up over 500% on the past 5 years, and you can see that most of that has come in that most recent run-up since the March lows. Wayfarer is another type of e-commerce platform that focuses more on interior furniture and interior design. If we take a look, you can see here that Wayfarer actually posts different furniture objects. And you can see furniture, decor, pillows, renovation, kitchen, rugs, items for your home. And this is more of a furniture type e-commerce platform that has continued to grow rapidly. You can see here that their total revenue in the past 12 months is at $11.4 billion. Meanwhile, 5 years ago, they were at $2.2 billion. So another company that has posted insane growth over the past 5 years. If we take a look at Wayfarer, this company is still losing money each and every year. They have continued to post net losses, but this is a company that continues to reinvest back into the business, continues to grow, and I'm sure soon, one day, they will be posting profitable earnings. Stock number 6 on our list today is, of course, eBay, a very popular company within the United States, used to sell consumer-to-consumer deals, and of course, there are some business-to-consumer deals done on this platform as well. Up 40% on the 12-month chart. This has not seen as much of a growth compared to the other companies. This company, eBay, has been around for a little bit longer. They are not as fast growing compared to the other stocks we've taken a look at. Past 12 months, only up around 40%. If we take a look at their market cap, smaller market cap once again compared to some of these giants that we saw today at around $38 billion. Overall, they still are growing revenue year over year, but not at the insane rate that we noticed from other companies. 5 years ago, around $8.5 billion in total revenue. Meanwhile, $11.2 billion in total revenue this year. So overall, still growing consistently year over year, but at a much slower rate compared to the other high-flying companies we saw today. This company is profitable, and that's one thing to take a look at compared to some of the others. So in the past 12 months, they brought in $5 billion of net income, which is absolutely incredible. If we take a look at their platform, they sell, of course, new and used products. This is a website where you can personally sell your goods to other people, or businesses are actually selling products on eBay as well. The final stock we have to take a look at, and the seventh e-commerce stock you can take a look at today if you want to get into this sector, which has seen insane growth over the past 12 months, is Etsy. Ticker symbol ETSY, around $128 a share right now. Up 122% on the 1-year chart. The shares have exploded over the past couple of months. 5-year perspective up over 600%, but once again, most of that run up we've seen in the past 12 months. This is a company that is kind of small, with a market cap at only $14 billion, is the smallest market cap company on our list today, and this website sells more consumer-to-consumer goods or small businesses to consumers, and what this is more handmade crafts and gifts that have more, unique designs and that are not mass-produced. So this website has seen insane growth once again. 5 years ago, revenue of only $273 million. Meanwhile, they broke that billion-dollar mark in the past 12 months, up to $1.1 billion in total revenue. So another company that's seen beautiful growth over the past couple of years. Overall, this entire sector has seen massive growth. A lot of these companies have been surging over the past 12 months, and if you believe the e-commerce world will only grow, these are some of the names you have to take a look at, and you may want to add to your portfolio if you want to get exposure to the new digital world. In my personal opinion, I do believe this e-commerce sector will only grow. Some of these stocks may be considered overvalued at the current moment, but you have to take a look at and determine if you believe the shares of these companies will be worth more in 5 years, and if you believe the overall trend of shopping online from your phone or your laptop is only going to grow, then these are the companies that will benefit over the long term. So thank you for watching, everyone. I'm the Gen Z Investor, and see you in tomorrow's video.